In today's video, we're examining how a relatively modest sum, let's say $10,000, can provide a stream of dividend income that might just surprise you. From S&P 500 to individual stocks, we'll explore how different types of investments could transform your financial future. Before we get started, don't forget to hit the subscribe button to stay updated with our latest content. Introduction to Dividend Income. We are going to focus on one such scenario, a portfolio size of around $10,000. Could this amount be substantial enough to help pay some bills, or perhaps even fund a tropical vacation for you and your family? Let's dive in to find out. Dividends are a portion of a company's earnings paid out to shareholders, typically on a quarterly basis. They provide a steady stream of income in addition to any potential capital gains from your investment. Dividend investing can be an excellent strategy, especially for those looking for passive income or cash flow during retirement. In terms of actual numbers, consider this example. If you invested $10,000 equally among companies with an average dividend yield of 2.87%, you would receive about $287 in dividends per year. However, it's important to remember that not all companies have the same dividend yield. Some may have higher yields, while others might focus more on growth and therefore offer lower or even no dividends. As you can see, the amount of dividend income from a $10,000 investment can vary quite widely depending on where you choose to invest your money. In the upcoming sections, we'll delve into some specific investment areas, including the S&P 500, Dow, high dividend funds, sector funds, individual stocks, and growth ETFs to give you a clearer idea of what you can expect. Remember, if you're finding this information valuable, make sure to hit the like button. The power of dividend investing. Now that we have a foundational understanding of what dividends are and how they work, let's talk about the mechanics of dividend investing and its incredible potential. Dividend investing goes beyond the instant gratification of receiving quarterly payments. Its real charm lies in its potential for compounding growth. When dividends are reinvested, you're not just earning returns on your initial investment, but also on the returns themselves. In this manner, your wealth could potentially snowball over time. Let's consider that you have a dividend income stream that produces $325 in additional dividends each year. That's $325 that can be reinvested to purchase more shares, which in turn will generate even more dividends. Now, this doesn't even take into account the impact of possible dividend increases. Imagine a company decides to increase its dividend payout. This would directly amplify your annual dividend income without you having to invest any additional capital. Moreover, it's essential to note the historical performance of dividend-paying stocks. According to a 2013 report from JP Morgan Asset Management, companies initiating and growing their payouts between 1972 and 2012 provided higher returns with lower volatility than non-dividend-paying stocks. So, not only do dividends provide a stream of income, but dividend-paying stocks could potentially boost the overall return of your portfolio and do so with less price fluctuation. One of the great parts about dividend investing is the milestones you reach. Each time you achieve a milestone, it motivates you to strive for the next. It could be earning your first $1,000 in dividend income or reaching a point where your dividends can cover a certain bill or expense. Collecting $10,000 in annual dividend income from a $10,000 initial investment may seem like the holy grail of income investing. While achieving this within a few years is rather ambitious, reaching this milestone within 2 or 3 decades is a realistic and effective use of capital. High dividend funds and sector funds. Now, let's explore some investment options that could offer high dividend yields. High dividend funds and sector funds. High dividend funds are mutual funds or exchange-traded funds that focus on stocks with above-average dividend yields. These funds can be a great way to diversify your portfolio and generate a steady stream of income. They can include a broad array of companies across various sectors and sizes, ensuring that you are not overly exposed to a single stock or industry sector funds, but instead concentrate on a specific industry or sector. For instance, the utility sector is known for its high dividend yields, driven by its stable income and regulated environment. Other sectors like consumer staples and healthcare also tend to offer attractive dividends. Investing in sector funds can be a good strategy if you believe a particular sector will outperform or if you want to supplement your portfolio with exposure to a specific industry. Now let's take a look at how a $10,000 investment in these funds can yield dividends. Suppose you decide to invest $10,000 equally among 10 companies included in a high dividend fund or sector fund. With an average dividend yield of 2.87%, you would generate about $287 in dividends annually. This might not sound like a lot, but remember, this is passive income, earnings you receive without any additional effort. Plus, as we've discussed, the power of dividend investing lies in the potential compounding growth when these dividends are reinvested. It's also crucial to remember that while high dividend yields can be so appealing, they should not be the sole factor in your investment decision. It's important to consider the company's financial health, the sustainability of its dividend payments, and the overall growth prospects of the industry or sector. In the end, high dividend funds and sector funds can serve as valuable components in your investment portfolio, offering both income and diversification benefits. Don't forget to subscribe to our channel and hit the notification bell if you want to keep learning about other types of dividend-rich investments. Individual stocks. Investing directly in individual stocks that offer robust dividends is a path worth considering. Let's take a hypothetical situation where you invest $10,000 equally among 3 individual dividend-paying stocks such as Kinder Morgan, Clearway Energy, and Schweitzer Mauduit. According to some predictions, this investment strategy could generate around $550 in income for the year 2022. Remember, these companies have a history of paying dividends, which can be an indication of their financial health and commitment to rewarding shareholders. Investing in individual stocks can also offer the possibility of capital appreciation in addition to dividends, giving you a two-pronged approach to earning returns. For example, a $10,000 investment could yield an impressive $5,300 in dividends over a decade, not counting any potential capital gains. However, it's important to note that investing in individual stocks requires more research and diligence. As an investor, you need to thoroughly understand the company's business model, its competitive positioning, and its financial health. Evaluating these factors is essential in identifying stocks that can provide sustainable and growing dividends over time. And while the potential returns can be enticing, investing in individual stocks also comes with its own set of risks. Stock values can fluctuate, and companies can also choose to reduce or eliminate their dividend payments in times of financial stress or for other strategic reasons. That's why it's important to have a diversified portfolio and not put all your eggs in one basket. Growth ETFs in dividend investing. As we move forward, let's take a look at another powerful tool in dividend investing, which are growth exchange-traded funds, or ETFs. ETFs can be a valuable addition to your portfolio, giving you exposure to a wide array of securities in one fell swoop. Now, you may wonder, how do growth ETFs fit into the dividend investing framework? Well, growth ETFs focus on companies with high growth potential, which often reinvest their earnings back into the business to fuel further growth rather than paying out dividends. However, many of these high-growth companies do pay dividends, even if it's not their primary focus. While growth ETFs may not offer the highest yield in the long term, they provide an opportunity for considerable capital appreciation. So in addition to dividend income, you can also enjoy capital gains as the value of the ETF rises over time. Importantly, growth ETFs offer a level of diversification that's hard to achieve when investing in individual stocks. With ETF, you're spreading your investments across multiple companies, which can help to mitigate risk. In other words, if one company underperforms, its impact on your overall portfolio is lessened because your eggs aren't all in one basket. So if you're considering investing your $10,000 into growth ETFs, remember the potential for dividend income may not be as immediate or as substantial as it might be with other dividend-focused investments. But the potential for capital appreciation could more than compensate for lower dividend yields in the long term. Overall, growth ETFs represent a fascinating mix of growth and income potential, making them a worthwhile consideration for investors looking to balance out their portfolios. Remember, always conduct thorough research or consult with a financial advisor before investing your hard-earned money. By the way, if you want to know more about the pros and cons on getting a financial advisor, you can check one of our videos in the description box below. Remember, investing involves risks, and past performance is not indicative of future results. We've seen how investing a $10,000 sum in dividend-paying assets like S&P 500 funds, Dow funds, high dividend funds, sector funds, individual stocks, and growth ETFs can generate a steady stream of income. However, remember, investing is not a one-size-fits-all venture. It's crucial to align your investment choices with your financial goals, risk tolerance, and investment horizon. The power of dividend investing lies not only in immediate income generation, but also in the compounding potential over time, especially when reinvesting dividends. It's a journey of financial growth and resilience that can guide you towards significant milestones, whether it's paying some bills, taking a well-deserved vacation, or building a nest egg for your retirement. If you learned something in this video, please hit that like button and consider subscribing to our channel for more informative and engaging financial content. Don't forget to share this video with your friends and family who might also find this helpful. Leave your comments and questions below, and let's keep the conversation going. Thank you for watching this video. We'll see you in the next one.